Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, August the 11th. I want to begin with gold, and it's on our watch list and our request list, so we'll spend a couple of minutes here. We're seeing a major correction this morning, back below the 2,000 mark. We're down about 2% at current. This is a 4-hour chart. These will all be 4-hour charts unless I say otherwise. And this 4-hour bar here has just opened up, and it's opened up within the body of the prior candle. What that tells us is that they may try to rally it, but have an expectation that we may just fail here because this candle is implying such. We tapped the third standard deviation Bollinger Band. It rallied, relief rally, could go on for the rest of the morning, but I think ultimately we're going to fade here. This is not to be bought just yet. Soon, not quite yet, because what we're seeing is a risk-on session, and I've been warning. You can go back to Thursday Night Stock Charts Live. The last time I did it publicly, I've been warning about a rally in the U.S. dollar and a rally in bond yields. And let's take a look at both of those now. Then we'll go to a higher level view of gold and where do I believe it's going to go. So here's the dollar. It has been rallying. The strange part is that with the price of gold moving down precipitously, the dollar's not up. In fact, it broke this new 4-hour bar, which opened up only 2 minutes ago. It broke support. Let's check out bond prices, which could be the other culprit. We'll go with the 10-year bond price. So, yeah, we had a rough night overnight on bond prices, which means that yields are moving up higher. This was what we were concerned about. Not that they're still not at historic lows, ridiculously undervalued, but it's just a reason, given the technicals of gold, for them to make profits real. Here's the yield on a weekly basis. We gapped up higher yesterday, and we continue higher this morning. We have a new weekly high. This is the first weekly high since this one here back during the week of July the 6th, which faded. And prior to that, it was the week of June the 1st. So how we close out the week, we're not sure yet. Way too early in the week, but I'll tell you, we've been watching this RSI. We've been talking about it. It's a threat, putting in a higher low. Now it's hooking up. If we close up higher today, this is only going to get stronger. If we close out the week strong and up near the highs of the week, this is going to look like a monster going into next week. Let's take a look at gold prices on a... We're going to go to a monthly basis because we'd like to play the higher level view game here. And that's to identify where we think gold might be going. It's a pretty easy call. And why is it easy? It's because we spent 9 years of building a base from back here in September of 2011 to the breakout last month, which didn't stop at resistance, didn't pull back and form a handle at resistance, to consolidate and then take a run at new all-time highs. No, no, no. We broke out last month, closed near the highs of the month, had a continuation month this month, and where I think we're going in the near term is we are coming right back down here to 1923 spot 70. Blockchain, good morning, buddy. Hope all is well. Been a while. What's your upside ES target? We'll take a look at that. Or downside. I think that there's reason to be a bit concerned about the S&P 500 for only the reason that the Qs are very extended and weakening up a bit. You saw that with Microsoft yesterday. Apple, I think it was on a weekly basis or a monthly basis, very extended relative to its third standard deviation Bollinger Band. So I think there's some selling to be had there. That doesn't mean we're going to collapse. It just means that we're going to see sector rotation. And that's something we've been talking about, is that we'll probably see money rotate into the banks, into the financials, into the industrials as yields begin to crimp back up higher. And the high-tech COVID plays, which ironically were in the NASDAQ 100 and the smaller plays as well, Zoom, etc., they're probably going to take a break here, unless, of course, you get a second spike, and then they're going to take off yet again. So long story short, on gold, expect support level number 1 to be 1923 spot 70. We are trading this morning at last look down below the 2,000 mark. So all good stuff longer term if you're a gold bull, as I am, and we will be looking to get along in the future. We remain long of the gold miners. We have been booking profits. So we're going to keep our position, and we're going to look to add to our gold mining position at lower prices. Let's check out silver since we're on the topic of precious metals. Yeah, big break on silver here. We're down over 3 1/3%. We were able to close above support this last 4-hour bar, but the new 4-hour bar here, we are weakening up here quite a bit. We've come a long way very, very quickly on silver. No great shock to get a pullback. We're bullish on silver, and we will be looking to re-enter the long side. We have book profits on silver. We've shorted silver for a scalp. We shorted the gold miners for a scalp last week. We shorted gold for a scalp last week. Profitable on all three. We don't want to stick around too long to have our face ripped off. So I think that the silver trade is still looking good as a potential short. Gold is dropped quite a bit here. I don't think it's a short right now. I think you're just picking up pennies at this point. Let's take a look at the equity futures. Blockchain, we'll go to your question in a moment. Yeah, SLV puts, yeah, I'd be okay with that. Given the volatility of silver, what I would like to do is sell an out of the money or a deep out of the money put, and then buy a near the money or an at the money put, and that way you're hedged on that position. The reason why blockchain is because it's just so volatile. Let's take a look at, where are my E-minis? There we go. All right. So, chatting with a couple of buddies last night, they're talking about fading the rally for scalp using spider puts. Now, we're up nearly 3/4 of a percentage point this morning. We're in an ascending wedge formation. And we're very close to the pinnacle. What I would do here is I would set an alert up above. I like to be very, very careful when I'm scalping anything to the short side when it's in a strong bull run. And we need to have odds that are in our favor. And I like to see this get extended, preferably with RSI above, well above 80 on a 4-hour basis. Currently, we're at 76.37. I'm setting this up above. Here, let's show you what I'm doing here. Above this resistance level. I want to see it overshoot. Then we'll see whether or not it can close above it. And if it begins to weaken and then fails and drops back down into this trading range, then I would entertain putting on a short trade. The reason why I'm so cautious right now is that when you take a look at the S&P 500 and how it closed yesterday, very, very bullish. I think we're going to all-time highs. And we're not that far away. $33.92. We're not that far away, folks. We could be there today, tomorrow. Now the question is, do we break out or do we fade? And if we fade and fail to take out the prior highs, do we break down below recent lows? And if that occurs, you can expect blood in the streets. Now, when you take a look at the, I'm going to clean this up here. This is a mess. Okay, let's start new. Here's my concern about the Qs. We are limping up higher. We're up 0.66%, underperforming the S&P 500 again, as it did yesterday, by a wide margin. If we do break out, I want to create upper bands of resistance here, which is what I'm doing. So you could see that we did have a triangle formation, which was forming. That formation failed. And now what we're trying to do is we're trying to limp back up to recapture this prior support level, which is now going to act as resistance. I'm not loving the triple Qs, despite the fact that we're up on the morning. So what we'll be watching for is an opportunity to buy the SQQQ, which is a leveraged ETF putting you short of the Qs, leveraged 3 times, I believe, or 2 times, one of the two. All right. Let's go to the small caps. Small caps are on autopilot. They're up over a percentage point. So going back to blockchain's question earlier, where do I think that, I kind of already answered it, but I'll restate it. Where do I think the S&Ps are going? I think they're going to all-time highs. That's price target number 1. And we'll watch and see. Are they able to rally through or not? Now, energy is at the precipice of a big breakout. And for that to occur, you need to see a rise in nat gas prices. Check that box. Let's go to a weekly chart really quick. Big rally last week. This week, no new weekly high, but we're holding gains, pulled back a bit. Oil was light sweet crude. Oil is a monster. Look at this. This is a weekly chart. It's just been sitting here. Just sitting here doing nothing. I believe that this afternoon is the inventory report after the close. So just be forewarned. If you see a draw in inventories, as you saw last week, my guess is we break out on oil. This is a monster chart. We broke out last week, pulled back. We're trying to break out yet again this week. 4-hour basis. See, oil is critical for the president's reelection. You don't want to see layoffs or more layoffs in the fracking sector. Have little doubt that oil is going up higher. We've broken out on a 4-hour basis. Loving this. Let's check out the XLE. I know fellow member Norris has got a ton of XLE at around $37 a share. He's waking up to a nice payday. We're up in the pre-market, $38.40. We closed at $38.33. I think we're going up higher. We do have resistance above. I think we're going to break through it. Loving the energy sector. We've been warming up to it for a while now. VIX. Another lower low on the session. Of course, boding well for stocks. And one of the reasons why I come to the VIX is I always look for divergences. Whenever you see VIX up and the S&P's up, you know there's going to be trouble down the road. So we'll keep an eye. And we've seen this quite often in recent past where just prior to a big sell-off, you've seen VIX up, S&P up. Somebody was out there in the know buying insurance on their portfolio. So we'll keep an eye on this. At current, we're down substantially this morning. You could be right, blockchain. Maybe you're right on the oil report. I don't follow it all that often. Usually, I have my headsets on, and I just hear it on the news. The Nat Gas inventory report. I know that's the Nat Gas one is on Thursday, 10:30 a.m. I could have sworn the oil inventories report was after the close. Let's see if it's on Market Watch. No, it's not on here. That's odd. All right. Let's go to some chart requests. Beautiful chart here on the S&P 500. Juxtapose that to the Qs. Look at it's ridiculous, the divergence here. In fact, what I want to do is this. I don't expect much of a divergence right now. So a bit of one back here, recovered. We'll keep an eye on this. All right. Folks, we're going to use TrendSpider for our chart requests. We'll mix it up with other charts as well, but primarily stock charts provided by TrendSpider. They're one of our sponsors. There's a link below, 35% off. The next level in automated technical analysis. Oh, and by the way, Thursday night, Futures Live, we're going to have Jake or Dan, one of the two, on from TrendSpider. They'll be teaching us about some of the new functionality here. So with that, I need to bring up some symbols. FSR. It sounds familiar. First Reliance Bank. All right, let's take the trend lines off. I happen to like the banks right now with rising yields. Let's first go to a monthly chart. And the monthly chart, nice breakout. Here. Very nice. Stokes are beginning to hook up. RSI clearly hooking up. Let's overlay some resistance levels. All right, so here's where we get a little bit concerned about opening up a new position. We have monthly resistance, excuse me. We have monthly resistance right above at, let's call it $6.07 per share. Let's just round it down to $6 a share. Where do we close? $5.95. So we need a pullback. Weekly chart. Now you may be looking at this chart on a weekly basis and saying, you know, wow, it looks pretty good. Looks like we have a clear run up to here at nearly $6.80 per share. But when you overlay monthly resistance the game changes. All right, so this is the value of having automated technical analysis. So resistance clearly above. I would not be a buyer just yet. So the question then becomes, when would we be buyers? This is a daily chart with monthly resistance and dash line. We've already done a retest of the breakout point. That doesn't mean it can't happen again. I would be a buyer on a close above this dash line here at $6.11. That puts resistance in the rearview mirror. Or if we get an orderly pullback to, let's drill down to a 4-hour chart, see what that tells us. $4.52 would be nice. So FSLR, RL, sorry, FSLR is First Solar. FSRL for our support. I will keep it active for a few days. I like the banks right here, right now. Why? Rising yields. We're long of the banks. So that's the play. Wait for a pullback or a breakout. One of the two or a mixture of both. What else do we have? HUYA. HUYA. What happened here? Earnings? Chip maker. They did a sell. All right, whatever it wasn't liked by the market. They're reporting earnings today. So just be forewarned. I'm not sure what time, before or after. Is this the report? Yep, this is it. We're not going to get into this now. Let's just check out the reaction. That's all we need to know. The reaction is not horrible. We're up. Last ticket around $25 a share. So it's tradable with that in mind. Let's go back to the charts. Monthly chart up first. Not much data here, but what data there is bullish. We broke out. Weekly chart. Outside reversal week thus far. This is critical to hold this support level. As a matter of fact, I'm going to use the closes of yesterday because this volume shelf, there was a tug of war to get through. If we drop that back down below it, you don't want to be involved with these shares because that means you're going to have a lot of resistance above. So at current, this should act as support. We should rally off of this level. If we don't, there's something very, very wrong. Daily chart yesterday, a breakout point failure, not what you want to see. We had broken out above this resistance level Back here on a gap up. On the 5th, rolled over. After touching the upper band of the rising uptrend channel in red, we touched the extreme lower band in blue. We should expect a gap up. If we close above 23.83 on the day, let's just say 24 bucks a share, I think we should be okay with a stop loss just below. So this may have been a gift by the stock market gods, this pullback, because longer term the stock looks really good. What else do we have? Oxy, OXY. This is one I haven't gone over in quite some time. And it's looking good. Very, very good. You know, when you come out of a correction, many times you don't realize whether or not on this rally, whether or not you're seeing a V-shaped recovery, which you rarely get. You'll see them more on an index versus a stock. And it looks kind of like this. Your dead cat bounce. Excuse me. So the question is, you know, do we continue up higher or do we fade? And in this case, we faded. The big however here is that we held support at 1509. We broke out here in June. Remember, this is a monthly chart. Nice retest this month and last month. On the monthly chart, I really like this setup. I think it's an early stage of recovery. Weekly chart. We've broken out on the week. Here's that retracement. This is why we don't chase stocks. We always anticipate a retracement. And more often than not, you get them. You just need to show patience. And believe me, I was not born with patience. Far be it. It was a learned and a very, very expensive emotion to harness. And not that I harness it all the time. Loving Stokes, loving the RSI. Look at this. Higher lows. And what are we doing this week? We are breaking out. Granted, only one trading day in the books here for the week. But thus far, it's looking really, really good. Daily chart. I mentioned earlier about volume shelves. And you can see we held this volume shelf. There was a tug of war between bulls and bears down here. Bulls won out. We're moving up higher. This is an energy play. I like energy. I think these shares are going up higher. Early stage recovery. Very bullish on the name Oxy, OXY. What else do we have? NEO. I need to check whether or not there's news pre-market here. NEO. It's one of them high flyers. And it's still flying high this morning. 1522. Do we have news? Oh, did they report? Earnings conference call 8/11. That's today. Excuse me. So earnings alert. They reported they have a beat. That's why they're up. Actually, they missed. Right? Or EPS. Oh, no, they beat. Okay, the earnings per share expectation was 15 cents. The reality was 15 cents versus beat of 26 cents. First cup of coffee, forgive me. All right, so they lost less money than what was expected. Good report. Being bid. Just beware of the earnings report or the earnings conference call. You never know what they're going to come out with. With these shares, you never know. They're going to announce a secondary. Who knows? And you've seen a lot of that lately. So just be careful in advance of the conference call. But let's take everything at face value. Bullish report. Let's go to how we closed out the day yesterday. Actually, let's go to the monthly chart first. Stay consistent. Not a lot of data here. I hope they do announce a secondary, because what we've been seeing lately on a lot of these names is that they announce a secondary, they pull back a few bucks. What happens? They rally. You saw it with, what was it, Nikola? You saw it with Virgin Galactic, SPCE, just to name a few. All right, so NEO. Monthly chart, no new monthly high yet. Still looking good, though. We're above the close of last month. More importantly, weekly chart, because there's a lot more data here. If they goose with a report that they're going to issue new shares, which I wouldn't be the least bit surprised about, I have zero knowledge of that. Expect to pull back to 1042 to 946 per share. However, all things being great with the world, nothing gets announced to the negative, then expect a continuation move higher. Weekly chart looking rock solid here. Daily chart. Daily chart looking rock solid. I think the shares go higher, absent a negative announcement on that conference call. Be careful. And with that, folks, I want to say, everybody, please have a profitable trading day. Thanks for joining in, and I will talk to you soon. Be well.